Greetings traders and welcome back. Thank you for joining me for another In-Depth with Chris episode. That's me. Today we are going to be covering what is a pip. As you work your way into the trading world or work your way around any trading Forex forums out there, you'll hear traders often say pip. It's spelled P-I-P. It's something that represents a measurement, but no one ever really talks about what that measurement is. Today, we're going to cover all of that and more. And as a matter of fact, if you look around the charts right now, you can see pips everywhere. Do you see them yet? Don't worry, by the end of it, you'll understand exactly what a pip is. Let's dive on into it. So, what is a pip? Well, by the definition, PIP is just short for point in percentage. We even hear people sometimes say it stands for price interest point. Either one of these will be acceptable, but the core of it is a pip itself refers to the smallest price movement a currency pair can make given whatever exchange rate that it's referencing. Pips are used to reference gains and losses on a trade quite commonly, and we can think of them almost like you would think of an inch adding up to feet. We use the inch to measure a distance, just like we use the pip to measure distance of a market move. Understanding their changes in value can help traders better manage their trading strategy as well. If we take a look at a pretty standard quote of, say, the euro dollar, this number really isn't too far off from the present day value. The only difference here is we have a whole bunch of different colors going on. But we'll say this is the euro dollar, which is going to look something like this on any trading platform. Now, ignore my terrible handwriting, but here we go. What this is telling us here is $1 is going to be how much of a euro? Well, it's going to cost us $1.129 to make 1 euro. That's what this is telling us. That is the exchange rate here. So it's always the second pair, how much it takes of the second pair to make the first pair. So if the euro dollar is 1.129, that means it takes $1.129 to buy 1 euro. Now, as far as the pip goes, the pip is almost always going to be the fourth decimal place, with a few rare exceptions like the dollar yen. The yen is a weird exception to that rule, but we'll get into that in a little bit. But nonetheless, this is what we're looking at here. So the pip is going to be this measurement here where we're seeing 4 decimal places out. That's 1, 2, 3, and 4. So the 7 here represents the pips plays. The reason that we have it down here saying 7 pips is because if this was going to be a difference between 1.1290 instead of 1.1297, that is 7 pips of difference over the 0. Bear with me here. And as we keep moving each place down, obviously we're just going to have simple math here, meaning that by the time we get over here, a simple 1 at the front of the decimal is going to be equivalent to 10,000 pips. And you can see the difference here as we work through all the different decimal places along the way. And then finally, down here at the very end, outside the pip, there's actually something smaller, which once again we will get to, and that is going to be 1 pipette. That is the smallest measure of move, and some platforms actually don't even display this, but for the most part, this is going to be what comes after the pip place, which will usually be, once again, the 4th decimal place. So using the pound dollar as an example over here, if we have a change between this 6 on the left to the 7 on the right, this equates to price having changed 1 pip. We have gone up 1 pip because remember, the 4th decimal place over here and over here represents the pip. So as we increase in moves of 0.0001, that is going to be the measurement of 1 pip. If it moved 0.0005, well, then the price would have moved 5 pips. In this example, price has only moved up 1 pip. So when a trader says they made a 50 pip gain, that means their trade, if they were going long, for example, say they bought at this price here on the left, would have gone up 50 points beginning at the 6 and going this way over here when the trade was all said and done. Now, the value of that is going to be determined by the value of that individual pip based on the exchange of which they're trading. Which brings us to our next subject, the value. So what is the value of a pip and how do we figure it out? Well, in any given Forex trading position, the pip value refers to the change in value following a 1 pip movement in the relevant foreign exchange rate. It's essentially the price attributed to a 1 pip move in a trade and used to reference the gains or losses incurred on that position. The currency pair being traded, the size of the trade, and the exchange rate at the time of trading all influence the value of that particular pip. Next comes everyone's favorite part, the calculations. Now don't panic too much. Usually, you won't have to calculate pip values yourself, as most of the Forex brokers or platforms will do it for you. There are also several pip calculators available out there for you online as well if you just throw a quick Google search in. So don't worry about exerting your brain too hard or getting any headaches, and you don't have to yell at your dog. But nonetheless, calculating pips is still useful to be aware of exactly how it's done, so we are going to cover it. To calculate pip value, we're just going to take one pip, which is obviously 0.0001, and multiply it by the trade size or number of base units being traded, which we refer to as a lot. Then we'll divide the figure by the current market value of the currency pair. So the equation will look something like the pip value is equal to, parentheses, decimal place pip times the trade size, end parentheses, all over the exchange rate. This means that pip values will differ between currency pairs since there will always be variations in exchange rates. If the quote currency is the US dollar, however, the pip value remains the same. A standard lot size of 100,000 equals a pip value of $10, which is our 0.0001 times 100,000. Let's say we're trading the dollar CAD, which is the USD CAD for those of you that are unfamiliar. In a dollar account, we would simply divide the pip value for a standard lot, which we know that standard lot is $10, by the dollar CAD rate. Let's say the dollar CAD is 1.3 at the moment, then the pip value amounts to, say, $7.69. That means $7.69 because we have $10 divided by 1.3. You may be thinking, well, hey, Chris, don't be an ignorant American. What if I'm not using a dollar-based account? Well, don't worry, I've got an answer for you. So the thing is that pip values are typically fixed when the currency the account is funded with is listed as the second pair. For example, if you have a British pound account, okay, and any pair that would say be pound XXX, meaning pound anything like the pound dollar, as an example, that will have a fixed pip value. To calculate the pip value for a pound XXX pair, we would divide the fixed pip rate by the exchange rate. For example, if a British pound Swiss franc pair had an exchange rate of, say, 0.855, then a pip is worth 1170 pounds for a standard lot of 10 over 0.855. If your trade includes the Japanese yen, and it was, say, the pound yen, for instance, the formula would be slightly different since pip movements for the yen are measured in 2 decimal places. You heard me right. The yen is 2 decimal places. It's one of the random outliers that isn't 4 decimal places for the pip. Instead, it is 2. It is one of the only ones you will probably run into unless you're trading some really far off outliers. But for the most part, once again, the yen is going to be 2, and the most everything else will be 4 decimal places to determine pip value. So this is simple though. In this example that we were talking about, after calculating the pip value, we would just multiply our result by 100. That's all we have to do. So multiplying by 100 compensates for those 2 missing digits. An example of that would be if the pound yen exchange rate was 134.7, we would divide 10 pounds by 134.7, then multiply the result by 100 for a pip value of 7.42 pounds. Not so bad, right? Understanding pip value is also beneficial for helping us calculate our position size as well, because position sizing simply refers to setting the appropriate amount of units of whatever currency pair we're interested in buying or selling within our comfortable risk level. This is also referred to just simply as the lot size that we choose. Now, this is the way that we go about it. The first step is to decide our risk per trade. This is the total risk we're willing to be exposed to on a single trade. This is usually expressed as a percentage of the balance in our trading account. The general rule of thumb is to not risk more than 2 to 5% of our account balance on a single trade. So let's say our account balance is $100,000. Our risk exposure should be somewhere around, say, $2,000 per trade, representing 2%. The next step is to determine our stop loss in pips. A stop loss is essentially an exit plan for when the market swings against us so we don't incur more losses. Before entering the trade, we want to place our stop loss level expressed in pips. For instance, if we're trading the euro dollar at a potential entry price of say 1.2080 and we place our stop loss at 1.2030, then we have a stop loss of 50 pips. And finally, we want to calculate our position size. The simplest way to do this is to divide our risk by our stop loss times the pip value. Okay, so that means our position size will be equal to capital times risk percentage per trade, all divided by the stop loss times the pip value. Now, using these figures, our position size would be something like $100,000 times 2% divided by 50 times $10, which is equal to 2,000 divided by 500, which equals 4. That means our lot size would be 4. Pips, pipettes, and lots? Oh my. So essentially we've already covered what pips are, but when we talk about pipettes, a pipette is going to simply be 1/10 of a pip. So if we know that a pip is going to be the 4th decimal place right here representing 1 pip, well, simply put, the pipette is going to be the digit that comes after that. It's going to take 10 of these guys to make 1 pip. Now, some trading platforms do not even display the pipette, although it is pretty common that you'll run into these on most trading platforms, so we should still discuss it. A lot of these digits, once again, are going to be moving at such a quick rate that it's not going to be overly concerning to you as a trader, but nonetheless, it is important to be aware of all the verbiage. So once again, just remember that the pipette is going to represent 1/10 of a pip, and it is going to be the digit that comes next after it. We can cross off pips, we can cross off pipettes, but now it's time to talk about what lots are, and that doesn't just simply mean a lot of cookies or a lot of cake. It is a measure of units, okay? So a lot refers to the number of currency units we wish to trade. So these numbers that we're looking at here are typically fixed. So if you want to enter a trade, you can buy that number of units per trade. So we have a nano lot, a micro lot, a mini lot, and a standard. The nano lot is going to represent 100 units. The micro lot is simply going to represent 1,000. The mini lot is going to represent 10,000. And I'm sure you're already catching on to the trend here. This standard lot is going to represent 100,000 units. So relatively simple. It's just going to represent another measure of units. It's something that we're going to be able to use to say, okay, I'm interested in a mini lot, or maybe I'm interested in a nano lot because I am just not really feeling it today, or maybe I'm going in and I really would like to own a bunch of lots of standard size and really make some market moves here. Because practice makes perfect, I've brought a couple examples for you, don't hate me too much for it, to give you a chance to use some of the information that we have learned today to calculate some of these problems on your own. Our first one is going to be, let's say that we traded 2 standard lots on the euro dollar, and it closed at 1.1750 after gaining 60 pips in our favor. What would our total profit be? If you need to pause the video and skip and go back to the beginning in order to make sure you are doing it right, I promise you I won't know, so I won't be mad. But take some time and see if you can solve it out. You got it? All right. So remember that the pip value is equal to the decimal place pip times the trade size divided by the exchange rate. So if the pip value is 0.001 times 2 times 100,000, remember the 2 represents the 2 lots, all divided by the 1.1750, that's equal to 1.702 in regards to euros. Or in dollars, that would be $20 equals 17.02 divided by 1.1750. To determine our profit, we're just going to multiply the pip value by the pip movements. That means 17.02 times 60 pips equals 1021.2 in profit. Or expressed again in dollars, that would be $20 times 60 pips equals $1,200. Let's throw a curveball into the mix and see how you do when we introduce a yen pair as well. So if we traded one lot on the dollar yen and it closed at 110.40 with a loss of 50 pips, what would the total loss from the trade be? Now remember, the yen is the one that has the pip point being 2 decimal places in instead of 4. Take some time and figure it out, and we'll come back with the answer here. So the pip value would be 0.01 because of the second decimal place times 100,000 divided by 110.40, which equals $9.05. That's $9.05 times 50 pips, which equals $452.50 in losses. If you got it, congratulations. If you didn't, keep practicing. Now we understand what pips are, pipettes, and lots. And knowing this information can allow us to better manage our risk and correctly size our positions, which is crucial, as any trader will tell you. When we look at a chart now, the same one that we were looking at before we got going, we should see pips everywhere. Let's pretend that we were to take a trade right here at, say, 1.0867, and we went long. If we got out at 1.0870, what did we gain? Well, we gained 3 pips. With our newfound knowledge, the sky's the limit. But thank you for joining me again, everybody. I do appreciate it as always. Please make sure you click the like and subscribe button below, and I will see you in the next one. Thank you all. Over and out.